The real estate industry wants you thinking about one number, the purchase price, maybe the monthly mortgage payment. They do not want you adding up property taxes, homeowners insurance, PMI, HOA fees, maintenance costs, closing costs, utility increases, and the eventual selling commission. I bought my first house thinking I knew what I was getting into. I did not. The number that actually matters, the true annual cost of homeownership, was nothing like the mortgage payment I'd been comparing to rent. Closing costs alone are a gut punch most buyers don't fully anticipate. When you buy, expect to pay 2 to 3% of the purchase price in closing costs, lender fees, title insurance, appraisal, attorney fees, prepaid property taxes, and insurance. On a $400,000 home, that's $8,000 to $12,000 due at closing, on top of your down payment. First-time buyers who scrape together $80,000 for a 20% down payment are often blindsided when their lender tells them they need an additional $10,000 at the table. Property taxes vary wildly by location. The national average is around 1.1% of assessed home value per year, but Texas averages 1.7%, Illinois 2.2%, and New Jersey hits 2.5%, the highest in the country. On a $400,000 home in New Jersey, that's $10,000 per year in property taxes alone. In California, Prop 13 caps increases at 2% annually, but starting assessments are still high, and property taxes only go in one direction over time. A house that's affordable today can become unaffordable in 20 years if taxes have doubled. Homeowners insurance runs $1,200 to $2,400 per year on a typical home, but that's before adjustments for your local risk factors. In Florida, Louisiana, or coastal California, insurance costs have been rising dramatically due to climate-related claims and insurer withdrawals from those markets. Some Florida homeowners are now paying $6,000 to $15,000 per year for homeowners insurance. Several major insurers have pulled out of California and Florida entirely. If you're buying in a high-risk area, get insurance quotes before you're under contract, not after. Maintenance is where buyers most chronically underestimate. The 1% rule says to budget 1% of your home's value per year for maintenance and repairs. On a $400,000 home, that's $4,000 per year, $333 per month. Some years, it's zero. Some years, the roof needs replacing at $15,000, the HVAC fails at $8,000, or the water heater gives out. The 1% rule accounts for these lumpy costs over time. Buyers who don't maintain a repair reserve are the ones financing emergency repairs on credit cards at 24% interest. HOA fees exist in approximately 30% of U.S. homes and are nearly universal in condos and new suburban developments. Average HOA fees nationally run $200 to $400 per month, $2,400 to $4,800 per year. High-rise condos and luxury communities can charge $800 to $2,000 per month, and HOA fees go up. Special assessments, one-time charges for major community repairs like parking garage resurfacing or roof replacement, can run $5,000 to $30,000 with minimal notice. Read the HOA financials before you buy a home in one. When you eventually sell, and most people sell in 7 to 10 years, you'll pay a real estate commission of 5 to 6% of the sale price. On a $450,000 sale, that's $22,500 to $27,000. Your buyer's agent, your agent, split it. This is one of the largest transaction fees in any common financial transaction. It's not going away, and it's almost always non-negotiable with traditional agents. The recent NAR settlement changed some rules around buyer's agent compensation disclosure, but the total cost hasn't moved much yet. The true annual cost of homeownership, fully loaded, on a $400,000 home, mortgage P&I, $2,076, property taxes, $370, insurance, $150, maintenance reserve, $333, HOA, where applicable, $250, total monthly, $3,179, or $38,148 per year. Compare that to renting a comparable place for $2,400 per month. The ownership premium in this example is $779 per month, and that premium needs to be justified by appreciation, equity buildup, or lifestyle value. In many markets, it isn't. The way to protect yourself before buying. Demand a detailed disclosure from your agent on all carrying costs for the specific property. Ask for 3 years of property tax history. Get insurance quotes specifically for that address before making an offer. Review the home inspection for deferred maintenance items, get them fixed or priced into your offer. Calculate your total monthly out-of-pocket cost, not just the mortgage payment. If you can't afford the mortgage plus $500 per month in reserves, you can't afford the house. Homeownership can absolutely be a sound financial decision, but only if you go in with accurate numbers, not the simplified version the industry presents. Know your full monthly cost. Build your maintenance reserve. Don't confuse the mortgage payment with the cost of the home. If you're still weighing rent versus buy for your specific situation, our video on renting versus buying in 2025, the actual math for your city, walks you through the price-to-rent ratio calculation and the break-even analysis you should run before deciding.